Hello, welcome to the European Open briefing for Friday, March the 9th. I'm Rafi Barjan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. So we've got quite a bit of risk sentiment this morning in the markets. It follows that news that US President Trump has agreed to have a face-to-face meeting with the North Korean leader. So this has significantly eased geopolitical tensions in the region. The dollar is up. Global stocks have also benefited from these developments, although the risk on sentiment has been somewhat dampened by this signing into law of the tariffs on steel and aluminium by US President Trump yesterday. Coming up later today, the US jobs report, that's going to be the highlight. We had a Bank of Japan policy meeting earlier today. They kept policy unchanged as expected. Didn't see much of a market reaction. The euro, though, did fall sharply yesterday following dovish remarks by Mario Draghi following the ECB policy decision yesterday. It's slightly firmer this morning. The Canadian dollar did get quite a bit of a boost, though, as the President Trump said that Canada and Mexico will be excluded from those tariffs. We also have Canadian job numbers coming up as well later on. Quick look at the markets now. We can see dollar yen is up around 0.5%, currently around 106.70. The euro has managed to recover slightly from yesterday's lows. Sterling is fairly flat at the moment. The Aussie and the Kiwi are both up on that risk sentiment. Oil prices have also recovered from a sharp sell-off yesterday. Gold prices are, as you would have expected, down this morning. And we can see most indices here are in the green. We saw a positive close yesterday on Wall Street. Asian markets were also up this morning, but a bit of a mixed start in Europe at the moment. Moving now on to the dollar, we can see the dollar index sharply up this morning. So apart from the dollar yen gains, the dollar index is also benefiting from that drop in the euro yesterday. So President Trump has agreed to meet up with North Korean leader Kim Jong-un by May, although we don't have any details yet as to location and exact date. So this has boosted the risk appetite. But yesterday, though, President Trump did go ahead by signing the tariff proclamation on steel and aluminium, although it did include Mexico and Canada, and there were other exemptions as well. Trump said that other countries could possibly be excluded if they were to apply for exemption. So this possibly means, though, that in order to get exemption, they would have to make some other allowances to the US. We don't have enough details yet as to how that's going to work. But the fact that the tariffs weren't quite as broad-based as initially feared, that did add some relief to the markets. We can see dollar index and dollar yen both near one-week highs at the moment. Later on, it's going to be important, the February jobs report, particularly the wage growth numbers. If we were to see another strong jobs wage growth in February, that would fuel expectations of aggressive rate hikes by the Fed this year. Moving now on to gold, you can see gold has been drifting lower this week. It's currently trading below its 21 period moving exponential moving average. There does seem to be some support coming from around the 1,315 level. We can see that area also acted as support in the past as well. So the latest developments with North Korea have significantly eroded those geopolitical risks, and we're seeing other safe havens benefit as well. The yen and the Swiss franc are both down this morning. We had the Bank of Japan policy meeting. Wasn't much of a reaction to that decision as it was widely expected, although Kuroda did say, the Bank of Japan governor did say that he basically ruled out an increase in the yield curve target anytime soon. So that's once again means that we had seen some expectation that Bank of Japan could possibly start normalization soon. but Bank of Japan policymakers have backtracked on such talk, and now clearly the indications are that there will be no normalization at all this year, and a small chance of that in 2019. We had some Japanese data. Household spending came in above expectations, jumping in January. Real wages, though, disappointed. They fell back by 0.9% in January. That's a major setback for Japanese government's aims in boosting wages in Japan, which would in turn boost inflation. So once again, that adds to the expectations of no change in Bank of Japan policy anytime soon. A quick look at the euro now. Yesterday, the ECB dropped its pledge to increase bond purchases. So that was expected by some analysts, but not everyone. So that was a bit of a surprise. We saw the euro briefly spiking up to 3-week high 1.2446 before the sell-off took hold. So the ECB is no longer saying that there is a possibility of increasing the size of its asset purchases, given the strong recovery we're seeing in the Eurozone economy. But Mario Draghi, the ECB president, was fairly downbeat on inflation. He said that victory cannot be declared yet, and that ample degree of monetary stimulus is still needed in order to get underlying inflation to head higher. So all of that has pushed back expectations of when the ECB will stop its asset purchases. We also did see a slight lower forecast, a downward revision to inflation forecast for 2019. 2018 growth, though, was revised up. Other forecasts were unchanged. The euro has found support at just below the 1.23 level. It's currently trading just below it, 122.95. And the Canadian dollar was one of the beneficiaries of that tariff announcement yesterday, given that along with Mexico, Canada will be excluded, at least for the time being. It is possible, though, that if the NAFTA talks don't go in the direction that the US wants, the US could potentially remove that exemption for both Canada and Mexico. But for the time being, that exemption doesn't have an end date. So that's a big relief for Canada. We can see Loonie has moved away from the 8-month lows it touched earlier this week, currently trading. It actually even we can see USD CAD has fallen below the 1.29 level. It's currently trading at 1.2869. We've got Canadian employment figures coming up later on. So if that comes in above expectations, and along with the easing trade tensions with the US, we could perhaps see a rise in the odds of how soon the Bank of Canada will raise rates, potentially a May rate hike coming back into play. And we're finally looking at today's economic calendar. We can see it's going to be a very busy day in terms of economic releases. We can see we had Chinese inflation numbers released earlier today, coming in above expectations for February at 1.2%. We can see the Japanese data there, household spending up by 1.9% year on year. We can see German trade data disappointed, and also industrial output unexpectedly fell in January as well. We've got UK industrial output numbers coming up shortly, and then later on, of course, we've got the non-farm payrolls and Canadian payrolls as well coming up. Non-farm payrolls are expected at 200,000 in February. That's due at 13:30 GMT. That's it from me. Thank you very much for watching, and have a great day.